Dr. Michael Ating Ego, formerly of the IMF. He's here with us. Please stand.
Governor, say that.
Thank you, Governor. You're all welcome to Governor's press briefing, monetary policy, August 2020.
Can I leave it?
Governor will give his statement, and then there will be a brief Q&A.
Monetary policy statement for August 2020. The Bank of Uganda, at the monthly policy committee meeting, which was held today, has maintained the central bank rate at 7% and remained committed to providing liquidity support to supervise the financial institutions, SFIs. Economic activity is estimated to have contracted by 3.2% in the second quarter of 2020 as a result of a combination of COVID-19 containment measures and floods. The complementary fiscal and monetary actions, policy actions, have provided a foundation for the recovery of economic activity as the lockdown is relaxed. The composite index of economic activity, CIEA, grew by 5.7% per annum, 5% month on month in June 2020, indicating a pickup in economic activity relative to the contraction registered in the 3 months up to May 2020. The Purchasing Managers Index also continued to register improvements since May 2020 and slightly crossed the 50% mark, the 50 mark, indicating improvements in the business environment. The COVID-19 pandemic has affected both the demand and supply side of the economy. Whereas supply will initially recover in line with easing of containment measures, demand will benefit only gradually from improvements in foreign demand and confidence levels, as well as continued support from fiscal and monetary policies. Eventually, aggregate demand is likely to increase faster than supply, thereby absorbing excess capacity. As the easing of the lockdown continues, the economy is expected to recover slowly, reflecting the effects of a slow rebound in both foreign and domestic demand, as well as subdued confidence on the part of households and farms. In addition, many consumers are expected to be hesitant to resume their previous spending patterns, partly due to fears of contracting the virus, but also uncertainty about earnings. Moreover, even those whose incomes were not affected by the pandemic may increase their need for precautionary savings. Furthermore, low exports of goods and subdued tourism receipts. Low exports of goods and subdued tourism receipts are projected to continue to weigh on economic growth given weaker global demand. Therefore, economic growth in financial year 2020-21 is projected in the range of 3 to 4%, further increasing to 5 to 6% in fiscal year 2021/2022. Economic growth is consequently expected to remain below the potential growth rate until fiscal year 2022-2023. The economic outlook is extremely uncertain, largely because of an unpredictable intensity and duration of the pandemic. The downside risks to the economic growth projection include the possibility of a widespread and possibly more severe second wave of the virus, requiring a complete lockdown, as well as a locust invasion. Moreover, Uganda remains highly vulnerable to recurrent spouts of global financial volatility, stemming either from continued global economic weaknesses or the uncontrolled spread of the COVID-19 pandemic. In addition, increasing non-performing loans and high lending interest rates domestically could delay recovery of private sector credit extensions to pre-COVID levels. On the upside, economic growth could turn out to be stronger than projected if the spread of the virus contained, or if a vaccine or effective treatment is available earlier than is currently being assumed. Such a scenario could lead to greater business and consumer confidence, factors which would likely lead to stronger economic growth. Annual headline and core inflation rose 5.7%, 5.8% respectively in July 2020 from corresponding levels of 4.1% and 4.9% in June 2020. The path of the CPI inflation over the next 12 months largely reflects the influence of containment measures, particularly on public transport, and increases in prices of imported consumer goods as a result of higher taxes support the import substitution programs. However, the decline in food crop and energy prices and the subdued demand could partly hold inflation down. Core inflation is expected to peak at 6.1% in the first quarter of 2021, while headline inflation could peak at 6.2%. In the medium term, the inflation outlook depends primarily on the speed and strength of at which demand and supply can recover. Risks to inflation outlook include a higher fiscal deficit and a more depreciated exchange rate due to the weakening external position. On the domestic side, domestic demand may take longer to recover despite the gradual easing of the lockdown. Moreover, food crop prices and external sources of inflation are likely to remain weak in the near term amid the global economic downturn. The balance of risks to the inflation forecast are assessed to be on the upside, with the core inflation expected to rise above 5% target within 12 months, even though GDP growth is expected to remain below its potential levels. Bank of Uganda has therefore decided to maintain the rate of CBR at 7%. The band on the CBR has also been maintained at plus or minus 2 percentage points, while the margin on rediscount rate and the bank rate is unchanged at 3 and 4 percentage points on CBR respectively. Consequently, the rediscount rate and the bank rate have been maintained at 10% and 11% respectively. The Monetary Policy Committee is cognizant that its primary mandate is to achieve the medium-term target of CPI inflation of 5%. However, it noted that the extreme uncertainty that characterizes outlook, which is heavily contingent upon the intensity, spread, and duration of the COVID-19 pandemic, particularly the heightened risks associated with the second wave of infections. Let me repeat this. However, it noted that the extreme uncertainty characterizes the outlook, which is heavily contingent upon the intensity, spread, and duration of COVID-19 pandemic, particularly the heightened risk associated with the second wave of infections. In these conditions, supporting the recovery of the economy is overriding in the conduct of monetary policy, provided inflation remains in the range of 5% plus or minus 3 percentage points. This is the monetary policy statement for August. Thank you very much.